Hey guys, welcome back. My name's Johnny, and if this is your first time watching, I show you how to make money in the stock market. So if you like that kind of stuff, feel free and subscribe to my channel and click the little bell so you don't miss anything. Alright, so tonight's video is another exciting video. It's a request from a subscriber of mine, and he said, "Hey Johnny, can you do a video on Callaway?" And so here we are. So let's get into it right away. Now, Callaway Golf Co., or ticker symbol ELY, I believe, like the title says, is a strong buy. And we're going to get into that right now and break it down for you. So start off, Callaway Golf, for all of you that know, they distribute and manufacture golf equipment and accessories. Basically golf clubs, golf balls, gear, accessories, and other. Now, this stock right now is trading at $22.35, and 73% of analysts are saying to buy, and 5,700 people on Robinhood own this company. Now, they have 2,100 employees, and they were founded in 1982. They're headquartered in Carlsbad, California. They have an average volume of 964,000, so they're just almost peaking $1 million. They have a nice dividend yield of 0.29, very small, but that's okay, and a price earnings ratio, which is really nice, of 20.14. Now, they have a large market cap of $2.11 billion, and I'm going to tell you why, basically. So, right now, it's 28% higher to buy, and it's very close to its 52-week high of $23.60. Now, as you can see, there's 73% is saying to buy, 27% of the analysts are saying to hold, and 0% are saying to sell right now. They did beat their estimated earnings substantially. They were estimating to get a 47-cent per share earnings, and they actually got 63 cents per share in their EPS, or their earnings per share, which is great. Not a bad company to get involved with. And a little bit more information on Callaway Golf for all of you that don't know. I found this article on investorsplace.com. Callaway Golf Co. is one of the second wave golf companies to move into the sport. ELY Callaway started his company in 1982 with the concept that he wasn't a good salesman to sell the mediocre products. Now, since then, ELY, or Callaway Golf Co., has been one of the top golf equipment companies in the world. Now, in the US, Korea, Europe, Japan, and it says Korea twice, it's the #1 club maker, and it's had over 75% market share growth in the past 6 years. Now, with that said, I believe that Callaway Golf Co. is a very renowned company for developing innovative products that help golfers hit a longer and straighter shot from tee to green. The company has expected earnings growth of 62% for the current year, and the ZAC consensus estimate for the current year has improved by 6.2% over the last 30 days. Now, you can also find this article at finance.yahoo.com, which makes it very strong report. I did also find this interesting. It was on the news in my local area, Albuquerque, New Mexico. They actually own 15% of Top Golf, which is this awesome, cool company that there's quite a few of them already in Florida and Tennessee, Georgia. There's quite a few other different places, but there's actually one now coming to Albuquerque, New Mexico. And it's a crazy huge facility. If you haven't checked out Topgolf yet, you should check it out. Just hit topgolf.com and you could find one closest to your area. They have food and drinks. They have party or event planning setups. They have this awesome facility that you can basically go and golf and do a lot of fun things while you're there with the family. Now, this is one of the facilities, I believe, in Florida. Great big facility. I believe it's 3 stories or 2 to 4 stories, something like that. I'm not too sure on that right off the bat, but really cool company to get involved with. Now, with that said, guys, I have more statistics to show you. Everyone knows that watch my channel, I like looking at the street rating. They always update it pretty frequently, and they deal with a lot of stocks. So right off the bat, as you can see, they have a 0.20% dividend yield, which isn't very much at all. But they do have a nice target price here of $25.75. Now, right now, that is a really good price target. There's another article that says it's at 26, I believe, which we'll get into in just a second. But they are a B for a buy rating, which is a nice, strong buy in my book. Now, they were in a buy in old history. And then they were in a hold for a while, and now they're in a buy again. But as you can see, guys, with the charts, the growth here has been phenomenal the last couple of years, specifically this last year. 3-year annual return here is at 28%. 1-year return here is 55%. And 3-month is at 13%, which is amazing. They have a nice net income of $144 million and a revenue of $30 million here. EPS of a 140. Now, some of the highlights here, as you can see, I've already highlighted. The company's strengths can be seen in multiple areas, such as a robust revenue growth, solid stock price performance, increase in net income, expanding profit margins, and growth in earnings per share. And the street feels its strength outweighs the fact that the company does show weak operating cash flow. Now, I do believe that's just because they're investing in a lot of different things and a lot of different new products. I was checking out some of their new products online. I want to say I might have some pictures on here. But maybe it was on my phone. But a lot of cool new drivers are coming out, and a lot of new cool golf balls are coming out that's supposed to be able to make you shoot farther and straighter with much better accuracy. Now, let's just get back into some of the highlights here. Since the same quarter last year, its revenues have rose 30%. Their strong earnings growth has increased by 140%, and over the past year, the stock has surged 55%. Its gross profit margin currently is at 50%, which has increased from last year significantly, along with the net profit margin of 15% here. I didn't highlight that area. And the net income increased by 144% compared to last year, rising from $25 million to $62 million. Last highlight here, during the past fiscal year, they reported lower earnings of 43 cents versus $1.98 in the prior year, but this year they expect it to improve to around 80 cents per share versus the 43 cents. Now, a couple things about the industry here. As you can see, the peer group analysts revenue growth here is showing that it's favorable right now. and their revenue growth up to 26%, which is great. Now, as a industry itself, the $62 billion golf industry has a positive outlook for the expected annual growth rate of 2%, which is expected this year. Also, they are favorable in their earnings yield, which is also up to 4%, as you can see there. Now, again, their net income's at $77 million. Their net sales are in the billions, and they have a PE ratio on this saying a 24, which is great. I like low PE ratios. That means they have a good chance. They are a good value stock. They're undervalued, and they have good potential to go up. Now, their growth factor here is 3 out of 5 stars. Their total return is 4.5 out of 5 stars. Efficiency is 4.5 out of 5 stars. Price volatility is 5 out of 5 stars. And solvency is 3 out of 5 stars, with, last but not least, income being 3 out of 5 stars. Now, with that said, this is also showing strong indications to buy into this company. They're not going to be holding back. I believe they're going to continue to move forward. Their positions, or basically net worth or stockholders' equity, also has increased by 11.59%. So again, that is really good information to know right off the bat. Last but not least, I just started looking at Zacks rating. I guess you could do the same thing like on the street, put in your email and get a ratings report from Zacks.com, I believe. So I did get that. That's from here. Now, with that said, their target price here, they're saying, is at $26. That's awesome. That's right around the last with the street, saying that it's at $25.75. What I really wanted to show you on this specifically, I don't want to go over anything really repetitive or explaining myself twice, so I usually try not to. In this case, what I wanted to show you on this specific PDF file that I downloaded is their industry's comparison to their competing companies. Basically, they're number one. I found like this was pretty cool. Their EPS growth is up. Projection sales growth is up, net margins up, return on equity is up. Everything is up. There is no negatives, no deficits. As you can see, compared to even the S&P 500, they have outperformed in many of the areas and are very close in some of the others. Now, this is also a good indication. That's why I like to look at different reports and get a lot of information so I could provide you guys with these videos. There's a lot that goes into researching stocks, especially when you're interested in 5 or 10 of them. So I hope these videos help you to make a decision a little faster on what you want to do. I am honest with what I provide, and I wouldn't tell you guys to buy anything that I wouldn't buy. Also, I think here to come, as these reports update, I'll be updating my old videos that show strong buys, whether they're downgraded to a hold or if they stay strong as a strong buy. I might try to do some type of update and make those. Anyways, I don't want to bore you guys with that, but I want you guys to know that I enjoy doing these videos. If you want me to do any of your videos that or any stocks that you like or aren't sure of, I can do those videos for you, just like this, give you some cold hard information, go from there. And also, you guys feel free to check out all these different free sites, but I do enjoy these videos. So subscribe and like. Smash that like button, guys. Smash the like button for me. It really does help me personally, helps the channel, and helps you guys so I could keep busting out great content. So you guys have a good night and a great weekend.